3 QBI deduction limitations. Those 3 are, number 1, taxable income is a limit on the deductions. Number 2, specified services. They're not going to get the deduction. And number 3, only active businesses get it. So we want, Congress says, wages and capital investment. But these limitations don't apply if taxable income is above a threshold amount. We're going to talk about the threshold amount. In other words, and not so small, if the smaller businesses, the individual's taxable income threshold amount doesn't apply. What would that be? So take a look at the 2019. The threshold limitation is the beginning. It's column 2. It's the first 2019. So the threshold is married couple, $321,400, $160,700 for the head of household and the single. That's the threshold. So why do we have another 2019? Because that's called the phase-in. Sometimes phase out, I don't really care. It's easier that it phases in. And notice for married filing joint, you're going to lose some of the 20% deduction as you climb above 321,400, over 100,000. So 421,400, the 20% is 0. Let's say, for example, that you're at 50,000. So 371,400. Your QBI deduction is 5% instead of 10%. That's all it means. The threshold is the first column. The deduction's gone, well, in the second column. It's gone by the fourth column. So let's take a look at the threshold. The threshold, married 321,400 at 160,700 for head of household and single. So what happens if you're below the amount? You get 20%. Unless your taxable income is lower, because that still is going to be true, but it's not the threshold. It's an override threshold. What if you're above? Then it's going to be the lesser of QBI or taxable income as you climb above 321,400, for example. So we put into the material some examples. Let's say Vilma had $1 million of QBI. She doesn't pay any wages. It's all her. She doesn't have any depreciable assets. So we take a look at page 2 of Vilma's returns, $980,000. Now, what's her QBI? The QBI is $1 million. So that's going to be 20% of $1 million. $200,000 are the greater of the wages plus the QBI income. Wish I had a pen. Taxable income is $980,000. So therefore, I just, forgive me, but I forgot to put the comma in the 1,000 plus 000. So forgive me for that. Now let's go to a different example. Tim gets an K1 from an S corporation. 300,000, 40,000. So he's got other people working for him. His wife has other wages outside of Tim's business. So when we add up the taxable income on page 2 for Tim and his wife, $450,000, What's a QBI? 300,000. The deduction is 20% of that. Or what's his wages? We don't have much, but at least he's got 40,000. Or 25% of the wages and 2.5% of his depreciation schedule. So now we've got the greater of, which is going to end up being the 20,000. His taxable income is now 430,000. So she really did. What is that saying? You got to have wages. Well, you can't be as a business that is all you.